The primary reason why everyone is talking about Walmart stock, I think, has to do with its relationship with tariffs and how the information Walmart provides gives investors broader information about the economy overall and worldwide positioning as the increase in trade barriers changes supply chains and causes all these disruptions. So Walmart provides those insights that investors can utilize. So in this video, I'll share with you the details about what Walmart is seeing right now, the decisions it's making, and how the tariff landscape, the increase in tariffs, is changing how Walmart is doing business.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the first things Walmart told investors it was doing was front-loading inventory, or in other words, bringing in inventory earlier than it needed to get ahead of the tariffs before the tariffs took effect. And so to have those inventories in place at lower costs, because future inventory will be subject to a higher cost of goods depending on the country it's importing from. Walmart famously imports a large percentage of its products and also imports a large percentage from China, which is exposed to 50% tariffs or above. It also imports from India, which is threatened by 50% tariffs. Right now, it is exposed to 25% tariffs. Or regardless of the trading partner, the cost of goods sold is increasing because Walmart has to pay tariffs to import those goods. So Walmart is the entity paying the tariffs. I know there's been a lot said about other countries paying the tariffs, but it's not other countries paying the tariffs. It's the specific business that's importing the goods from the specific country that's exposed to the tariffs. So if Walmart is importing from China, Walmart has to pay those tariffs at the rates indicated on products imported from China. If Walmart is importing products from India, Walmart has to pay the tariff on importing those products at the specific rate indicated. So Walmart is paying those prices, okay? It's coming out of Walmart's pockets. So right now, Walmart's saying the composition of their inventory is in good shape as they start the back half of the year. Their inventory is up 3.8% globally and 2.2% in the US. With regard to their US pricing decisions, given tariff related cost pressures, we're doing what we said we would do. We're keeping prices as low as we can for as long as we can. So, since they imported those products earlier and before the tariffs came into effect, Walmart is still selling most of its products at pre tariff prices. But Walmart indicated, and I might get to it in this video, but they talked about how over the next few weeks, every single week, they will be raising prices that customers will be paying in store. So Walmart is paying those higher prices to import goods. And since Walmart still needs to generate a profit margin and its profit margins are small, it is choosing to raise prices in store. So what you and me will pay when we go to Walmart, we will see higher prices. Walmart also talked about how consumers are changing their behavior and positively or surprisingly so, they're not seeing any major difference. So Walmart's saying what we're experiencing with customers and members here in the US is that their behavior has been generally consistent. We haven't seen any dramatic shifts. The way things have played out so far, the impacts of tariffs has been gradual enough that any behavioral adjustments by the customer has been somewhat muted. So because these tariffs have been coming in fits and starts, right? The tariff rate was announced in early April and then paused and then increased and then decreased. And then many companies were able to get inventory earlier. We haven't seen like a dramatic, sharp increase in prices. And so consumers haven't had a sharp reaction because the prices haven't increased sharply. We've seen prices go up, 5%, 10%, and sometimes that's not even noticeable. But Walmart's saying, as we replenish inventory at higher price levels, post tariff price levels, we've continued to see our cost increase each week, which we expect will continue into the third and fourth quarters. Not surprisingly, we see more adjustments in middle and lower income households than we do with higher income households. And this is something I've been talking about. Also, I've been saying that lower income households are going to face the brunt of these impacts from tariffs because lower income households spend a larger percentage of their income on these items that are impacted by tariffs. And so they will pay, proportionally speaking, the large proportion of the increases in tariffs. It's unfortunate, but it is the way it is. I know you might be hearing differently, but Walmart is facing the consumer. They're generating $700 billion roughly in annualized sales. They're going to have a big impact on what consumers see when they go shopping in stores. And each and every week, Walmart expects those prices to increase. They're trying their best to keep prices as low as possible because they want to gain market share, because they're in a better position to gain market share in this rapidly changing environment. Their size and scale gives them advantages in this changing landscape, whereas smaller importers that are facing these higher tariffs, they're going to have a more difficult time making these adjustments. So Walmart saying where item prices have gone up, we see a corresponding moderation in units at the item level as customers switch to other items or in some cases other categories. And this is something I've been talking about also for several months now. And I've been predicting that consumers will spend more money on services and less money on goods. And I'm starting to see early evidence that it was a correct forecast to make. Consumers seeing prices going up are changing what they spend money on, right? That's what Walmart is saying here. They go to the store, and previously they may have been buying a certain basket of goods. And now, since the prices on some of those items are higher, they've replaced those items with other items. So they're making changes based on the higher prices. And ultimately, the price of goods overall will rise. The price of almost everything will rise because most of the things you see in stores in the United States are imported from somewhere. Very few products are manufactured and produced in the United States exclusively. Even US based companies, even US manufacturers are importing components and machinery, and so their costs will increase as well. So I've been forecasting that as consumers see these higher prices for goods, they will spend more money on services, things like haircuts or going out to see a movie, going to a theme park, subscribing to Netflix or an additional streaming service instead of spending money on some good. And I'm seeing early evidence of this already happening. And I think more of this will start happening as more of these price increases start to go into effect. And Walmart is predicting that every single week, we will see higher prices going forward. By the way, this document I'm reading from is Walmart's most recently completed earnings call with Wall Street analyst. I've made this document, this highlighted document, available for my channel members, and you can join my channel for less than $5 a month. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.